One analyst is expressing strong conviction that Palantir could potentially double its share price during the year 2026. In recent months, Palantir stock has delivered very limited forward movement, leaving many investors frustrated by the lack of upside momentum. The stock currently trades below the levels seen back in August 2025, which gives credibility to concerns that the stock may be entering a consolidation phase. The powerful surge that previously carried Palantir from roughly $20 in April 2024 to more than $200 by October 2025, even so, the future remains uncertain and it is impossible to know what type of industry shift the year 2026 could bring, especially while defense technology spending continues to remain strong and politically supported. While the share price has stalled, the underlying business continues to operate with solid momentum. Palantir is expected to release its full year 2025 financial results alongside its Q4 earnings report on the 2nd of February. This upcoming earnings release could act as a catalyst for renewed optimism. If the company delivers another impressive quarter, it may reignite bullish sentiment and push the stock back above the $200 level. For investors who believe in earnings-driven rallies, this report could be a pivotal moment. That said, some analysts argue that a $200 share price is merely an early milestone rather than the ultimate destination. Their long-term thesis points toward an extremely ambitious valuation of $1 trillion. Before evaluating whether that scenario is realistic, it is important to assess where Palantir currently stands. Among large publicly traded companies, Palantir commands one of the most expensive valuations relative to its earnings. Analysts who warn about a potential artificial intelligence bubble frequently cite Palantir as one of the most vulnerable stocks, even ahead of Nvidia. The reasoning behind this view is that Palantir's stock price is significantly ahead of its earnings trajectory. Buying Palantir stock near $180 today effectively means paying for financial performance that may not materialize for more than a decade. At current levels, Palantir trades at nearly 180 times forward earnings. Even when viewed through a free cash flow lens, investors are paying more than 130 times free cash flow. By contrast, Nvidia trades at approximately 25 times forward earnings while delivering stronger and more durable sales growth. Unlike Nvidia, Palantir operates primarily as a software company and does not sit at the core of the artificial intelligence infrastructure build-out. Instead, its growth depends on expanding its customer base and increasing usage among existing clients. Once Palantir secures a foothold with a customer, the company has the ability to scale its platform effectively. However, there are natural limits to the size of the market it can capture. Because of this, analysts expect revenue growth to slow from roughly 54% for the full year 2025 to about 42% in the year 2026. Earnings per share growth is also expected to decelerate, falling from approximately 77% to below 40% over the same period. These expectations reflect a maturing business rather than a collapsing one, but they do suggest that hypergrowth may not persist indefinitely. The bullish counterargument centers on the rapid adoption of artificial intelligence across United States commercial enterprises. Supporters of this view believe Palantir could emerge as the default enterprise artificial intelligence platform, enabling it to grow far faster than current projections suggest. If that scenario plays out, Wall Street could assign an even higher valuation premium to the stock. In such an environment, paying more than 200 times forward earnings, or even 400 or 500 times, might not appear unreasonable until market sentiment changes and enthusiasm cools. The most recognizable analyst promoting this optimistic thesis is Dan Ives from Wedbush. He believes Palantir could become a $1 trillion company within a 2 to 3 year time frame and has encouraged investors to aggressively increase their exposure to the stock. Another analyst, Will McGough from Prime Capital, has also suggested that Palantir could eventually reach a $1 trillion market capitalization. While these views attract attention, they represent highly optimistic outcomes rather than base case expectations. Realistically, the odds of Palantir stock doubling during the year 2026 are extremely low. If the artificial intelligence rally accelerates further this year, the stock could reclaim levels above $200 and potentially move toward $250. However, even with exceptional earnings performance and an uninterrupted market rally, doubling the company's current market value would be very difficult to justify. Momentum has clearly weakened, which makes a $1 trillion valuation within even 2 years highly unlikely under current conditions. Artificial artificial intelligence software stocks are beginning to see valuation maturity, and the broader market may prefer to let earnings growth catch up with elevated stock prices before assigning even larger premiums. A particularly negative scenario would involve the artificial intelligence rally coming to an end this year. With substantial profits already on the table, investors could rush to lock in gains, placing significant downward pressure on Palantir stock. This risk becomes even more pronounced if the company struggles to maintain a consistent pattern of exceeding expectations and raising guidance quarter after quarter. Even with these risks, it remains possible that Palantir stock could eventually double in price over a longer time horizon. However, investors are better served by maintaining realistic expectations. Focusing on steady execution, incremental progress, and earnings-driven momentum offers a more grounded approach. Consistent and disciplined investing, combined with close attention to the company's gradual growth and improving profitability, provides a more balanced way to navigate this stock without relying on overly aggressive valuation assumptions. In the end, one analyst believes Palantir could potentially double its share price in the year 2026, even though the stock has struggled to gain momentum recently and remains below its August 2025 levels after a massive rally from $20 in April 2024 to over $200 in October 2025. Palantir trades at extremely elevated valuation levels compared to peers, with expectations already pricing in many years of future growth. Some bullish analysts argue Palantir could eventually reach a $1 trillion valuation if artificial intelligence adoption accelerates and the company becomes the default enterprise platform, but slowing revenue and earnings growth, fading momentum, and maturing artificial intelligence software valuations make a near-term doubling unlikely. A more realistic outlook suggests that while upside remains possible over time, investors should stay disciplined, focus on incremental progress and earnings execution, and avoid relying on overly optimistic valuation assumptions. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.